Hello friends, welcome to my YouTube channel, and today I am going to talk about stocks which are always in the news and people want to trade in them. So there are stocks or companies that have litigations against them, or there are companies which might be coming out with an emergency general body meeting, or coming out with some kind of any corporate news, and you are aware of it and you want to trade based on that news. It could be anything, but that trade might be very difficult to master because of the few reasons that I'm going to point out just now. So let's get started. So, how are newsmakers hazardous? So, stocks which are in news are very difficult to trade, and why is that? The first reason would be that the news itself could be fully priced in the stock price at the moment when you are taking the trade. How that happens is that people in the internal parlance who are close to the company, who have their ears to the ground, know about a particular way that result could be. For example, if a company A has a litigation against it and there is a judgment coming in the court, these people who are very close to the firm, who have a clear understanding of the business and the business environment at that point of time, or the know about of the how the judgment is going to go, they start selling or buying the stock based on their judgment, based on their understanding and their internal say checks and balances as to how the things would be. And hence you could be very late in buying or selling the stock when the news itself come out, and that's why there is a very nice cliche in the stock market which says that you buy on rumor and sell on news, and that's what happens say about 80 to 90% of the time. A second reason of not quite trading in stocks which are in the news is dynamic circumstances of the market. We all know that stock trading is pretty much online, and everybody can have access to news virtually even faster than what you are having, and hence there could be a pop-up or a slam dunk of the stock because of the news, whether it is negative or positive, and after a minute or minute and a half the stock recovers immediately. That happens because the people who had to buy or sell based on the news that was coming out had already done that, and so it is a different trade that is taking place, and you're taking a trade based on something that has already been priced in the stock. The third point here is never trade in stocks based on news which are fundamentally weak. Never do that. Especially I would suggest that you should not trade or invest in stocks which are fundamentally weak. The reason being, especially on the upside, the reason being that there are a number of people who are ready to sell the stock at a higher level, and there are a number of people who are stuck in the stock, and hence fundamentally weak company might give pop-ups, say infrastructure company in today's day and age, which are pure infrastructure company here in India. They are laden with debt, and hence whenever there is some sort of positive news coming in, the stock may run for 1 or 2 days, and then there is heavy selling. So there are people ready to sell, and that was my last point here, that sellers are waiting to lighten positions. And why would that be? Because they are stuck in the company for the last 1 year, 2 3 years, and they are waiting for some good news in the company so that they can bail out. There are many stocks, I cannot name them at the moment, but there are many infrastructure stocks at the moment which are in single digit or double digit. They were the bellwether of the stock market say 6 7 years ago, but now they have been beaten to pulp, and there are people stuck in it for the last decade or so, and they, whenever they see say a 50% 60% move in the stock, even a 20 30% move in the stock, they start selling, and that selling would be so humongous that no amount of buying can unsettle death. Another reason why newspapers should not be traded is because of of their liquidity. It is all correct to say trade a Reliance or an ITC or a TCS based on news, but when most of the people go into mid caps or small caps, micro cap stocks based on news, say a positive news, a development comes in, say a merger or an acquisition of a small cap company, a big acquisition, say in Europe, etc., of that sort, and you start buying the stock, you never know. I mean, you could be up 20% on that day, but next day there could be a different news coming in, and the stock could be circuit down. And that has been happening with people over the last 5 6 months who have been trading in mid and small caps, and you need to avoid that as much as possible. Hence, buy fundamentally good stocks for investment, and also for trading you should look at going in for stocks which are strong with their balance sheet, with their numbers, and that would hold you in good stead in the future. So that was my presentation on why you need to avoid stocks which comes in news every day, and there could be different stocks every day, and you need not go for that all the time. Kindly let me know how do you like the presentation or not, and leave your suggestions in the comment box. Also like and subscribe my channel. Thank you very much.